I find that if you can add value, if you can be a part of that conversation where people say, hey, I have this problem, or I'm looking to see if I can retire, I'm looking to see if I can become financially free, because then I can really go after my why. I can travel, I can write that book, I can spend more time with family, and the why is so important. And so to me, I want to be a part of helping people to get to their why. And if we work together, that's great. If not, it's just so rewarding, though, to feel like you can help people on their journey. And I think passive income is something that so many professionals need to hear about. Wall Street is multi-billion-dollar firms, and it's all driven by so much money's going into this, and yet you're really not going to become wealthy over time by investing in just, mutual funds, stocks, even index funds, these type of things. So it's finding other types of assets where we're seeing, very consistently 10 to 20% return per year. Obviously, every investment's different, but when I started hearing stuff like that, I was just like, it kind of really made me think, is this even possible? And then taking a step back and looking at what really wealthy people do, and the majority of a lot of very wealthy people, they have their money in different parts of institutional real estate.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. I have Bronson Hill with me today, and I'm going to give you a bio and a bio. And why am I going to give you two bios? Because I know Bronson actually quite well. First and foremost, the pre-bio to the bio is that Bronson actually co-runs my FIBI Pasadena Multifamily meeting. He approached me, I think it was a year and a half ago, 2 years ago now? 2 years ago? About 2 years ago? 2.5 years ago. Okay. He approached me and said, hey, Christina, I would like to run a FIBI meeting under your FIBI flag. Can I do it? Now, Bronson was at one of my, was either the first or one of the first three meetings I ever had, back when my real estate meeting was like 18 people in a boardroom. Now my real estate meetings, or our real estate meetings, are 40 to 50 people. Of course, they're on Zoom right now because this is 2021. But even before, when we were actually doing them in person, we were having 40 to 50 people. So I've known Bronson for a while, 8 years, 10 years, something like that, for quite a while, but we haven't really been close until we started co-facilitating these meetings together. And I'm excited because I've got a chance to watch Bronson go from a newer investor, having just a unit or two, to being a professional capital raiser, to starting his own company and his own brand. And today we get to talk about his own company and his own brand, which I'm very excited about. So let me read you now his official bio. The Bronson Equity team, of course, involves Bronson himself. So Bronson Hill is the founder and CEO of Bronson Equity, has raised over $15 million for real estate investment. He is a general partner in over $60 million worth of real estate around the world. Bronson is an authority on apartment investing and is continually putting out new content to help educate investors and help them achieve financial freedom, one of my favorite topics, right, guys? He spent his earlier years as a sales consultant for several large and startup medical device companies. He's been a guest on many podcasts, including mine now. Thank you very much, Bronson. And has written a report about the best investment strategies during and after a pandemic. So Bronson, welcome to the show. So glad to have you here.
Oh, Christina, it's so good to be here. I love spending time with you. I've learned so much from you over the years. And I do remember those first meetings that you had at your meetup. I think it was actually 12 people. We're on a boardroom, but my most vivid memory is you would literally show up when you were doing your market report, where you had a stack of 2-inch thick worth of copies. So like 200 pages, like literally for each person in there. And I thought, how many trees died today for this? But we left better people, and hopefully we recycled. But it was amazing. I've learned so much from you. I've so appreciated you've been a friend and a mentor for a long time, and it's great being a business partner as well.
Bronson, it's funny to me to think back on that, because that was in 2011. And I was specifically, for those of us who've been investors for more than a decade, we remember the Great Recession and we remember that downturn vividly. And I'm one of those people, and it taught me a lesson that I have never turned back away from, which is all ships rise and fall on the tide, and the tide of real estate is economics. And although I've never studied economics, I have now become an avid economic hobbyist because my investments and my clients' investments and my students' investments are all affected by the current economic environment. So therefore, every single month at that real estate meeting, I would bring my 150 to 200 pages worth of real estate articles and economic articles. And I did local California, I did US, and I did international. I also would do special topics like the shadow inventory at the time, or bank foreclosures, or they didn't do any moratoriums, or how many people were still in their homes for 4 years or more. I mean, there was different data I would find, and I'd get particularly hot on a particular thing. And poor Bronson would listen to me as I'd go through page after page after page.
Well, it was so unique because you actually would bring pages. There was no like presentation. You would just go through sheet by sheet and you'd hold it up. And it was a great interactive presentation. That was a very unique way to present. So thank you. And you probably spent more on the copies than, you got in, people
meeting.
Paid their $10 or $20 for the meeting.
Yeah, it was
so
$10 at the door at the time. And it was like, okay, $10 at the door for 10 to 12 people is $100 to $120. And I was spending at least $160 to $250 just for the copies.
It's a labor of love.
Correct.
It's a labor of love. You
love.
give back. You're giving back.
And then I figured out I could do a mini projector and PDF it. And I got to keep that $100 because, of course, that $100 was so important to me. Like clearly, as you run one of my meetings with me, we don't do it for the money.
No,
not at all.
No,
not at all. Not even close. Our requirement is simply that the meetings break even so that us showing up is a gift of our time and not a gift of our finances. So Bronson, tell us a little bit about your story in real estate. I know it because I've been able to watch you grow, but my listeners don't know it. So tell us more.
So I basically became an accidental landlord. I bought a house in another state, was living there, and ended up changing jobs, moving back to Los Angeles or Pasadena, more specifically where I live. And basically, I had this house that I almost sold, but decided to keep it. And just thought, hey, this real estate thing is pretty nice. Over the years, the cash flow started to pick up, the value started to pick up. And so what I thought is, hey, I'm going to basically buy more houses and become financially free. Started buying houses in Cleveland with a family member, about 3 houses that were between $10,000 and $30,000 each. Did a bunch of work on them, fixed them up. Ended up basically having a chance meeting with a cousin who I hadn't seen in years, and he was a multifamily guy and had just been super successful in multifamily. And I told him my plan to get 30 houses and rent them out and have passive income, have this passive income. Mm-hmm. And he said, well, that sounds like a lot of work. He's like, why don't you do multifamily? And I said, well, I'd love to, but I don't have the money. And he said, well, you can raise the money. And so I just, started learning everything I could. He said, read this book, listen to this podcast, go to these events. And I just did everything he said. Then we started to meet up, and it's really been amazing from there. So basically my first multifamily deal was 225 units. I raised a small amount of money for a large deal and got some experience. And once you get experience, people take you more seriously. Was able to find a partner who was having some trouble, who had a big reach as far as his audience, but was really having trouble raising money, and I was personally able to raise about $15 million over about a year and a half. And so now I'm a general partner in 800 units, and I love multifamily. I love passive investing. Really my passion now, after having spoken personally with over 1,000 individual high net worth investors, is just really teaching them about passive income and what it means to have your money work for you, and not just you be working hard in your business or at your job, but to really kind of throw things in this other bucket we call passive income. So that's really a little bit of my journey and how I got where I am now.
So tell me, I know Bronson Equity is your brand. You've raised money for other brands, but Bronson Equity is your brand in particular. And one of the things that you love is education. So tell us about Bronson Equity and what it's doing and about its education.
So Bronson Equity is a real estate investment group that basically what we do is we educate busy professionals about what it means to invest passively. Getting ready to start a podcast will be out shortly, called Mailbox Money, which is all about different forms of passive income. So real estate is one. There's different assets inside of real estate, such as multifamily or self-storage or industrial, all kinds of different stuff in real estate. There's also things like oil and gas, or there's even ATM investments. There's all kinds of other types of investments that are alternative. So I'm really personally interested in that stuff. I really geek out on trying to find ways to get better returns and diversify and do different types of investments. It's really interesting and it's very applicable to me. So it's really, this is about educating people that maybe have never done real estate, or maybe they have a house or two, but they're kind of where I was, where thinking, man, I just can't scale this. If I had a bunch of houses, it would really be a full-time job. And so the idea of, especially for high earners, is your time is so valuable. My time is so valuable. So if there's a way you can get basically the same return through passive investments, that's really the focus. So what I do is I partner with different capital groups that do multifamily or other types of assets, typically in real estate, and basically bring investors into the deals. I'm also a passive investor. I've invested passively for a number of years, and it's just been really awesome to be kind of in a journey with investors and partner with them. So there's the educational component of Bronson Equity. There's also the actual investment side, which are both a lot of fun.
So the educational component is more one-on-one. You're not offering like large classes or anything right now, from what I understand. You're really just taking your individual investors, the people you've talked to, and you help them and educate them specifically on how passive investments would fit inside of their portfolio. Is that correct? Tell me more.
Yeah, so that's correct. Right now I don't have any courses or any sort of paid, here's how you learn. I have a bunch of videos on YouTube. I'm putting stuff on social media. We'll have the podcast going out. And then basically, my passion is just really helping people along the journey. So I love connecting with people. And if anybody's listening and they want to connect, I'd love to connect and just kind of figure out what the next step for you is. Because for a lot of people, we feel kind of stuck. We don't know what we don't know. I think when I first heard about multifamily syndication and raising money from 50,000 from this person, 100,000 from this one, or personally investing into that, it just seemed like, well, how do I know this isn't a fraud, or this is something like how is this even real? And so to me, when I started meeting passive investors, I started meeting people that are really trying to give back, people like you, Christina, that are really committed to helping people grow, and you've been that for me, and I really want to be that for other people. And I find that if you can add value, if you can be a part of that conversation where people say, hey, I have this problem, or I'm looking to see if I can retire, I'm looking to see if I can become financially free, because then I can really go after my why. I can travel, I can write that book, I can spend more time with family, and the why is so important. And so to me, I want to be a part of helping people to get to their why. And if we work together, that's great. If not, it's just so rewarding though to feel like you can help people on their journey. And I think passive income is something that so many professionals need to hear about. Wall Street is multi-billion-dollar firms, and it's all driven by so much money's going into this, and yet you're really not going to become wealthy over time by investing in just, mutual funds, stocks, even index funds, these type of things. So it's finding other types of assets where we're seeing, very consistently 10 to 20% return per year. Obviously every investment's different, but when I started hearing stuff like that, I was just like, it kind of really made me think, is this even possible? And then taking a step back and looking at what really wealthy people do, and the majority of a lot of very wealthy people, they have their money in different parts of institutional real estate.
They do. 80% of the world's wealth is in real estate. Just in case anybody missed that, because everybody, of course, thinks like it's IRA funds or it's people investing in stocks, and actually no, the bulk of the world's wealth is in real estate. And it really has to do with so many people own their primary residence. Like you just start there. And then you add on to that anybody who owns a secondary residence or anybody who owns a rental unit. There's so many multifamily owners. There's a chart I saw once, and I wish I could pull it up any moment in time, because I've referenced this piece of data so many times. But something like 80 or 90% of owners who own multi-units own 1 to 3 multi-units. And yet the remainder of the owners that own multi-units, is this big gap, own 10 or more. They're basically industrial size. So they actually own more doors, and more wealth and more assets are owned in the multifamily market are owned by industrial, but the bulk of the owners are mom and pops. right? And of course, I'm a mom and pop, so that of course makes me particularly happy, right? Because I like to think of there are so many of us out there, but it doesn't mean that the bulk of the market is owned by mom and pops. The bulk of the market's owned by industrial. So, what do you love about multifamily versus single family or other styles of investments? Why was it multifamily where you landed?
Yeah, so that's a great question. Multifamily is something that I think it's really the bread and butter of every sort of. I mean, it's like the best of the best, and we've seen this during coronavirus. A lot of retail, a lot of office space has been hit really hard. I mean, you can make a lot of money in development, you can make money in a lot of different things, but the consistent, really people have to live somewhere. They have to pay rent, even with the eviction moratoriums and other things going on. We're seeing very few properties be more than affected, a few percent, 3 or 4%, just a small amount. And so the idea, there's many advantages. So one, let's say the stock market, returns are 6-7% per year. Well, we're seeing deals where we're underwriting pretty conservatively at 15+% per year. And so we about want to double the money in around 5 to 7 years, which is amazing. So you get these higher returns. If you look at the risk profile, risk is really defined as how much can your investment go down in 1 year. Well, we watched in 2008. We even watched last March when the stock market crashed, went down 30% plus, and it of course recovered, but it doesn't always recover. And actually, people don't realize this. That in 1929, when the stock market crashed, it took 25 years to get back to the same level it was. And that's not even including inflation. It literally went down and it stayed down for 25 years.
Yes,
And
I'm
so,
familiar with that. Yes, and
yeah.
real estate also took 15 to 20 years because it took over 4 years. The average was at least 5 years of people living in their homes without paying mortgages in the Great Depression. And we had
Wow.
4 in the Great Recession.
Yeah, yeah. So yeah, I agree. And I think the interesting thing about income real estate is that it is a little different because when you get to be larger scale, you get, especially 100 units or more, you start having on-site people. You have, people, typically a leasing person or a property manager lives on site. Then you have a maintenance person versus, let's say, you have 100 houses. The guy's going to, Home Depot, and then he's going to this house, and he's coming back, and you're going over here, and you have, 100 roofs. You've got 100 sets of plumbing. You've got so many different things going on versus this very efficient asset class. Another benefit I love is the tax advantages. The tax advantages are phenomenal. I mean, they've actually have some laws that have recently, the last several years, have passed where you can basically invest $100K into a deal, and it's not uncommon. We'll see 60 to 85,000 in passive losses year one. Some of that can potentially be recaptured later, so it's a deferral, and some of it is actually a write-off. And so you have these things that make multifamily real estate just to be much, much more stable. In fact, they found in the Great Recession of 2008, 2009, the worst point in the Great Recession, in single family, the default rate nationally was about 1 in 25 houses. And then of large multifamily of over 60 units, it was 10 times less. So it's 1 out of every 250. So these are really treated as like businesses. You account for vacancies. Everything's that's why there's so many institutions that are in it as well. But it's really the best investment that I think most people really don't think is possible. But sometimes for as little as 25 or 50,000, they can have ownership in just an amazing asset that performs well. So those are some of the reasons I love multifamily.
And that makes a lot of sense. And again, in the Great Recession, like another number was, there was over, I think it was 16%, 16 to 20% of some markets were REOs. And that's 16 to 20% of houses that were being offered on the market were bank-owned properties, which at 12%, according to the Norris Group, is a huge turning point in whether a market is stable or not. We've never seen that in multi-units. There's never been that level of REO ownership or people putting it out on the market. It doesn't work that way. Even if a bank was interested in taking it over, it often sells privately. It sells to another investor. It doesn't hit this market, and therefore it moves along much more efficiently, and it allows for better process and better returns on your multifamily as far as its stability as a market unto itself. It just doesn't have this wash of floods or flooding of bank-owned properties or distressed properties showing up on the market. There are too
Yeah.
many people. I mean, you've worked with a couple of these people who are professionals at finding markets or finding properties that are quote unquote distressed or underperforming and being able to slurp them up before they ever hit the MLS.
Yeah, that's a good point. We actually, about somewhere between 70 80% of these deals for large multifamily, they typically go off market. So it's really being in the know, knowing people in local markets, having partners there. And just, one of the deals that we had that closed about a year ago was it was in Huntsville, Alabama, which is a pretty strong market. I hadn't really heard of Huntsville, but there's a huge growth in industry, a lot of space, the FBI, all kinds of stuff happening there. And we were one of,
it's part of the tech triangle.
yeah,
That's what I've been told. I don't know.
It's really, I mean, a lot of government kind of really stable stuff there, but we made an offer on this property. We were one of 26 different offers. We were actually able to get it, and we were $600K below the highest offer. But how we got it is because we're so good looking. No, I'm just kidding.
That must be it. And when we get to, and at the end, maybe I'll be able to cruise your website and your advisors. You're all very handsome. We're all very good
looking. Yeah. So besides being good looking, the reason we got it was we put some hard money day one, which means, non-refundable earnest money. They also looked at our record and who our group is. And they said, wow, we know you guys are going to be able to close based on your prior track record. We actually have testimonials from prior sellers that have sold to us. And so so just sharing that, in multifamily, there are things that can give you advantages, especially if you with an experienced group.
Yes. And those do seem to be, I mean, I don't, of course, don't know all the groups you work with, but the groups that I'm familiar with do seem to be highly experienced. And we're intentionally not saying what they are at this point, guys, on the broad radio, because that would be considered some version of marketing. And as a capital raiser, he's not really allowed to do that. But you can call him, or you can go to his website and contact him through his website if you want to understand what are the large companies that Bronson's work with. So I'm just trying to cover that. It's not like we're trying to be evasive just to be evasive. So there's that. Now let's move on to part two. So I warned Bronson that there are 3 parts to this show. And part 2 is that real estate is not always kind. It's not always easy. I've seen 2 downturns, and I have had 2 times where I have lost large, significant, painful chunks of money due to real estate. And not all of them are in downturns. Some of them are just because something fricked up. So that being said, right, Bronson, tell us your work. Okay, actually, I promised him one more thing. I am also a hard money lender. And before I give anybody $50,000, $100,000 of my hard-earned money, I have a question I ask. I have a couple questions, but one of the questions I ask every single time is, tell me your worst story in real estate. How did you solve that? And what did you learn from it? Because if you've never had your backside handed to you by real estate, I don't want to give you any money. So Bronson, tell me.
Yeah, well, actually, I'm the first one that has all this experience and has never made a mistake in any way. No. That was the second part. I'm just going to talk, not only how good looking I am, but how
you never made a mistake in real estate.
No, real estate it's full of imprecise calculations, and things never turn out the way that you hope. They turn out better, they turn out worse, and sometimes those lessons where you make mistakes, they're the most valuable lessons. This is not real estate related, but I had a investment that I did with options trading, this options trading technical strategy. And I lost over $50,000 doing this at a time when it was a high amount of my net worth. And I learned from that, Christina, I learned that that's not the best seat at the table for me. Is I should do something different. I have other gifts. So
that's a good thing. That's a good thing. I have a similar story having to do with the .com bust. And I wasn't actively trading, but I lost a lot of money in the .com bust, and I gained a lot of money. I actually sold a piece of real estate that year, and I realized a lot of gains, and I went, I'm overinvested in the stock market. I'm in the wrong investment class.
Yeah.
Right.
Yeah.
So continue.
Okay. So that's my non-real estate. My real estate one was, I had this situation where I had a single family, and a lot of my problems, the major problems have been in single family, but had this house, had it rented for, 5-6 years, never tenants, in and out, new tenants, had the same property manager, but the property manager really, I think they didn't really do correct diligence on the people they were having rent, and because things went south. And when things went south, I started asking them, well, tell me about this process. Like, what did you do? Whatever. And they kind of gave me, some BS which I felt was BS. It just kind of like, hey, we've got to do this. We've got a process, and we can't. And I understand there are discrimination laws, and you can't, discriminate really on any basis except for someone's tenancy and how good they are going to be as a tenant and their credit report and different things. And so there's some things that came up later. But anyway, this tenant basically, after, I don't know, it was 3 to 6 months, stopped paying and just started trashing the place, started having loud parties. And there was a time that actually a neighbor, because I used to live in this area, it was in Montana, and a neighbor that I didn't even know somehow found my name and sent me a message on Facebook Messenger and was like, hey, wrote me like this letter. It was an older person, said, yeah, this big party happened and a brick came through the big giant window in the front of the house. And the police were called and all this stuff, and there was fighting, and this was kind of the beginning of the end. But anyway, all said and done, the people, after the dust settled and they were out, it was like $5,000 worth of stuff. So that, if you're looking at cash flow, if you're making $300 or $400, a month, maybe that's like a year or two worth of, of what just happened right there, that big party on a Friday night. So I learned some things from that. I ended up switching property managers and had a good experience after that. But, you learn, you have to learn from what the information you have and the things that you do. And I think for me, I learned that, asking those questions about a property manager's process of who they put in there and what happens if things start to go south, if neighbors are, because this stuff was happening. And I think the property manager really wasn't getting as involved as they should have been. And so it just led to a brick through the front window, the giant front window, and in the middle. Anyway, so it was a sob story, but I guess I learned from it. So.
No, it's good to know. One of the things I learned from my version of owning in the Midwest, those doors where you get $200 a month, if you're lucky, maybe $350, is exactly what you just described, which is it just takes one big party or it just takes one bad tenant, and you're going to lose your profits not only for that year, you might lose them for the next couple of years. And they're so sensitive. I call them they're like sensitive properties because you can't raise the rents aggressively. People move out, right? Because if you look at $1,000 rent there, right, is equal to, because we live in California, right, is equal to like a $3,000 rent here. Well, if you raise a rent here by $20, $3,000, that's hardly anything. But if you raise it there by $20, that ends up being meaningful to them. So they're much more sensitive. And the same thing, if you get a $5,000 bill and you're getting $3,000 a month, that $5,000 bill isn't so big. But if you're getting $1,000 a month, that's 5 months of gross rent versus a month and a half here in California. So those properties are very sensitive to these smaller gyrations. And it's made me more careful about the Midwestern cash flow properties, and even more in favor of multi-units or fourplexes or something like that. Or now my favorite is short-term rentals. So I'm with you, but that obviously didn't turn you away from real estate investing. Clearly you're still investing. I know you have a bit in your own portfolio, although you're a young enough man that it's not quite, I don't think you're quite ready to retire on your real estate portfolio yet, but I know that's your vision. What does financial freedom mean to you? Why use real estate if it's such a pain in the patootie or pain in the butt? Why use real estate for your financial freedom? Why not just be a capital raiser or go back to your medical sales job and, use your W-2 to be able to create your retirement?
So I'm gonna get really philosophical here.
Please do.
So the why, I think, is much more important than the what you decide to do. So the reason why you're doing, I've talked about this a lot. We've talked about this in our meetup. I remember one time we had a meetup where some guy was like, what are you even talking about here? We're just getting into the deep. We're crying. You're crying. I'm crying. We're talking about, because it's like a Tony Robbins moment. But at the end of the day, like the why of why you're doing this is so much more important than the what. And what I mean by that is my why is I want to become financially free so that I can help others to become financially free. I know that sounds shallow, but we all have a purpose. We all have something we're here to do.
It doesn't sound shallow, Bronson.
Okay.
I want to become financially free so I can help others be financially free. Okay, go ahead. I just derailed you.
It's cliche. The word is, but my goal is to help people to do what they're here to do. I feel like we're all here for a reason, and life is very short. I got divorced about 5 years ago, and it was really tragic. It was really, disappointing and heartbreaking, all these things. And I think what it really did for me, the thing that I gained out of that was life is short, and I'm here for a reason. I'm here for a purpose. And what am I here to do? And I think I have my faith, which is very important to me. I also have, if I can free up my time to really do only the things that I'm here to do, And financial freedom allows me to do that. And I think what I've realized is I want to be somebody who, John Maxwell is a guy that writes about leadership, and he talks about the idea of lifting a lid. So we have things on our lives, or even if we look at other people, that they can't really progress past a certain point until this lid is lifted. So if I can show up with other people and help lift that lid so they have a higher potential, and they say, oh my gosh, I'm a physician and I work 80 hours a week and I make millions of dollars a year. Literally, I know physicians like this, and yet they're not financially free. Because they're paycheck to paycheck, or and I said they're paycheck to paycheck. They have to go to work for a paycheck.
They have to go to work for a paycheck.
And they can't sustain this lifestyle without it. But if they were to take 10, 20% of this money, or 30%, whatever the amount is, and put it in this other bucket called passive income. And I tell a lot of people starting out, take 50,000, take a small amount. If people are higher net worth, take a small amount, put it in a deal, see how you like it, put it in a couple different deals, see what you think. Mm-hmm. And it's amazing what happens when people start seeing the power of it. Because then they say, oh my gosh, I actually can become financially free doing this. And so it's really these limiting beliefs that we have, that it's, well, I couldn't do that. Or, Bronson's doing that, or Christina's doing that, or other people are doing it, but that's not me. But I just learned that, anybody can do what anybody else is doing. You just have to learn the skills, and you've got to get around people. Jim Rohn has this quote that says, we are the average of the 5 people that we spend the most time with. So that's why it's so important to be around people that, encourage you and really help you. And sometimes even a couple steps ahead. I look at you and I think, wow, things that you've done and things you're doing, Christina, you are a couple steps ahead of where I am. And I hope to get where you are. I mean, there's things that I've done, maybe you haven't done. There's things that obviously we can learn from each other, but I have a lot of respect for you. And so I think for myself is just really helping people get to the why they're here, and really facilitating that. Because even if you know what your why is, you're like, I'm here to, I know you've shared with me, driving your daughter to school, that is really important to you, and being a mom.
Yes, it is.
That's really important to you. And so for you, financial freedom allows you to do that. And so that's it. And so for me, there's, and I'm sure people listening will say, well, this is why I'm here. This is what I want to do. This is the dream I have. I want to travel. I want to read. I want to write that book. I want to make my own impact. I want to leave a legacy, because life is short. And so that's, again, the why is just super, super important. So that's why all this is so important, is because it will free people's time up so that they can pursue the why, or even discover the why.
It's, I was talking to my sister the other day, and I was talking about how I only spend about 8 hours a week on my consulting practice, actively talking to people and doing my podcasts and stuff right now, right in this time. And I will increase the hours again when time frees up again. But I was saying those 8 hours a week of helping other people are for me. It's like, that makes me joyful, right? Being able to help other people find their financial freedom, like you said, right, makes me joyful. And I know it makes you joyful, right? To be able to say, I made a difference in somebody else's life beyond my own, feels on purpose. And so when you say your why is getting financially free so you can help others get financially free, yeah, there is a joy in that. There's a Jerry Lewis quote where they talk about, somebody was interviewing Jerry Lewis, and he said, why do you do what you do for all those kids? And I believe Jerry Lewis's response, and someday I should, memorize the exact words, was something like, if you have to ask the question, then you're not going to understand the answer. Because the why you do what you do is because it's joyful to make somebody else's life better. It is fulfilling to know that you've left a piece of this earth, as tiny as our little stamp might be, but you've left that piece better. And you've helped others leave their piece of their little world better. So I am with you with that, whether it's, and you don't have to have a spiritual belief in order to have that, although you and I do happen to have that spiritual belief. But I know there are other people who don't have a spiritual belief who just find the truth in that statement, that it is joyful for them to make other people's lives better. So Bronson, let me go to your website here. There we are. And let's take a look at the Bronson Equity Group for a minute. Mostly what I would like you to do is show me on Bronson Equity Group how people can get, oh, there we go. There's a video of you right here. I just went from introducing Bronson Equity, and there you are talking about your own equity group with the same BE Bronson Equity sign in the background. But if people want to get a hold of you, or they want to use your website, how can they do that? Educate us.
Yeah, so there's a couple ways I'd love to hear from anybody who's looking to grow or just has questions about anything related to multifamily or passive investing or just about talk real estate. So best way is you can send me an email, bronson@bronsonequity.com. So there's a contact. You can just click the button too. That's true. I guess you're
Well,
showing
I
me on
just
the
thought I'd
website
go
here.
there since you were saying email anyway.
Yeah, so there's a little form there. You can fill that out. We also have our Bronson Equity Investor Club, which is just there's the join button on the homepage, and it basically is just you can join our investment club, hear about upcoming deals, and we schedule a brief call with you just to get to know you a bit, see if it makes sense to work together. But the contact page as well, if you want to just get in touch, I'm happy to get in touch or set up a call and just talk about what things are important to you. And again, it's really, I think I love the quote from Zig Ziglar that says, you can have anything in life you want if you help enough people get what they want. And so the idea is everybody has different goals. Everybody has different things they want. And if we can just help people to, on their path, I think it's really, really valuable. So.
Okay, Bronson, anybody who wants to get a hold of you without going to your website, how do they do that?
Well, we make a joke at the meetup, Christina, that they can just don't email you because
Email
you
me.
will not email, but they should
I
call
will
you.
not
To me,
email
I
back.
do respond to email. I usually
Okay.
almost always respond within 24 hours. So it's bronson@bronsonequity.com. I'm also on social media on Facebook, LinkedIn, and Instagram. So.
Again, thank you, Bronson, with Bronson Equity Group. Wonderful to have you on the show. You can find Bronson at Bronson Hill. Type in Bronson Hill Real Estate on Google, and you will also find his website. That's how I found it this evening, as a matter of fact. Or you can find him at FIBI on meetup.com. He co-runs the Pasadena Multifamily FIBI Group. Bronson, you're awesome. Thank you so much for your time. Thank you for being on my show. Thank you for co-running my meeting with me. And thank you for being a man of integrity in this world. I truly, truly appreciate it.
Wow, thanks so much, Christina. Well, I appreciate you as well for so many ways. You've been a friend, mentor, co-leader, just in so many ways. I've so appreciated your heart to really help people, and it's very apparent you doing it because you love people and it feeds your soul. So thank you for feeding my soul tonight and everybody else who's listening as well.
Wonderful. I am Christina Suter, the host of the Real Estate Breakthrough Show. We post shows on Mondays and on Fridays. Make sure you check out some educational segments as well as me having guest speakers like Bronson Hill tonight. I am on Roku.com, iHeartRadio, iTunes, and a variety of, I think, Spotify and a variety of other platforms. You can also find me at YouTube. You can find FIBI Pasadena YouTube as well as Christina Suter YouTube. Please find out more, ChristinaSuter.com. Thank you so much. Tune in next week.